happy day, everyone. Good afternoon in Switzerland, and good evening in the Middle East, and good afternoon in Europe. Byron Wien, David Darst are here. And I just want to say, on behalf of the family office, we thank you for joining. The family office, as you know, was started in 2004, 17 years ago, to safeguard the assets of a couple of hundred very large families in the region. And with multiple billions of dollars now, that's the wealth management. And then the asset management, of course, is in Petiol Asset Management in Zurich, Switzerland. And we thank all of our clients in Europe and in Switzerland for dialing in. It's FINMA registered with the Swiss version of the SEC, multi-asset class, capital yielding assets, capital growth assets, specifically in the private equity, private real estate, and private credit sectors. We're so thrilled to be with you, Byron, today. As many of you know, Byron served as chief investment strategist for 21 years at Morgan Stanley and was a mentor and inspiration to many. Byron, and thank you for being that to me. Everything from where to have lunch and how to behave. Byron's written so many things. He was the most widely read analyst on Wall Street. He was recognized by First Call as that. He was ranked as the #1 strategist. He Lifetime Achievement Award from the New York Society of Security Analysts, a graduate of Harvard College, Harvard Business School, and named repeatedly as one of the 16 most influential people on Wall Street. And Byron, I've loved reading your investment notes, and you would sprinkle them occasionally with life behavior and lifestyle notes. And I have saved so many of those where you've given young people coming into the business advice as to their careers in these notes. For the past 12 years, Byron has served as senior advisor at Blackstone, which you know has $584 billion in assets under management. And this is the 36th year, 36 years, Byron, since you've been you've given out since 1986, your list of 10 economic, financial, market, and political surprises to which an average investor would give a 1 in 3 chance, but you, Byron, give a better than 50% chance of it taking place. Now, these 10 surprises this year, as many of everybody on this call, 250 people plus, related to Trump, a TV network, Biden with a more constructive dialogue with China, vaccine, Google, Facebook, their issues with the Justice Department, the economy, modern monetary theory, oil, the positioning in the market, defensive cyclicals, a correction in the first half, the 10-year going to 2.0% and the dollar firming up. Byron, I checked it last night, and you've got 6 out of 10 correct, either 100% or well over halfway there. So with the S&P up 3.3%, and I would remind everybody, it was exactly 1 year ago yesterday that the market peaked out February 21st before dropping like a stone to March 9th. So I'm going to turn it over to you, and we look forward. Albert Einstein died in 1955, and the media went to his place in Princeton and asked him who he thought was the Albert Einstein, who was the smartest guy he ever met. And he pointed to a picture on the wall and said, "That's Michael Faraday. And he's the man who put electricity together with magnetism. And he inspired James Clerk Maxwell, who then inspired me to write E = mc². And Byron, you have been our Michael Faraday for over 30 years. And we appreciate your being with us today. So welcome, everybody. Byron, we have a few questions for you. And we'll start out with politics. Some of the early signs that investors should be looking to right now, Byron, and paying special attention to, as you see the Biden administration. I made a slip there. The Byron administration taking shape here. What are some of the things that you're watching and that you want us to be watching, especially as we roll out the new administration, Byron?
Okay, I think the top priorities of the Biden administration right now are getting the virus under control, number one. And I think we were off to a slow start, but we're making better progress on that. That's number one. Number two is getting people back to work. There are still about 10 million people unemployed in the United States as a result of COVID-19, and we've got to get them back to work. The $1.9 trillion relief program, I call it a relief program, not a stimulus program, that will go a long way to putting people back to work. Then we've got to watch what impact that has on the economy. A lot of people are worried, and I'm one of them, that it's going to be too much stimulus too soon, and we run the risk of overheating. We've already seen the 10-year Treasury yield move up 40 basis points since the beginning of the year. And if it goes over 2%, say to 2.5%, I think that could be a problem for the equity market. Right now, I think the equity market is vulnerable. I think there's too much speculation. You can see that by the high level of margin debt, the companies with no earnings, some with no sales, going public through SPACs, the GameStop phenomenon. So I think the market is vulnerable to a correction. But I think overall, this is going to be a very good year. I think by the summer, we're going to be recovering and pretty well, and we'll be in some form of back to normal by the fall. So what we have to worry about are other aspects of Biden's program. He's definitely going to focus on the environment, on inequality. I think you can count on corporate and individual taxes to be raised, and that's not good for the equity market. But I still believe the equity market in the U.S. and really pretty much around the world will end the year higher than it started. So I think equities will outperform bonds. I think sovereign bonds are unattractive at this time. I think growth equities are attractive, but I also think value and small capitalization stocks are going to do well. I'm positive on the emerging markets, especially China and India. So I think there are plenty of opportunities for global investors as I look at the remainder of the year.
Byron, we've talked, I think it's almost like losing weight or keeping in physical shape, which you've counseled me over the years to do, keep in physical shape. And along these lines, we've talked about infrastructure for the last several years through the last couple of administrations, not just the previous one, but even before then. Do you have any guidance for us about the size, the likelihood, the timing of infrastructure coming on top of what you just mentioned, the priorities of getting the virus under control, getting back to work, and this relief package? If we put infrastructure spending on top of that, how's that going to fit into the mix, Byron, and the consequences and ramifications of the infrastructure part of this?
Well, we're talking about, or Biden is talking about, a $2 trillion infrastructure program. If we were to put that on top of the $1.9 trillion relief program that's already on the table, I think that would be more than the economy could handle, and it would be very inflationary. I also think the Republicans are going to move very slowly on it. So I do think something will be done on infrastructure, but I think the relief program is going to be implemented first. God knows we need an infrastructure resurrection. Our infrastructure is 100 years old. It's in need of remedial work at every level: roads, airports, water pipes, bridges, tunnels, etc. So we need it, but I don't think it's going to be a front burner item because I don't think Congress will pass it.
And will it be spaced out? Byron, do you see this? Is this a 10-year program? Is it, is it a multi-year program?
Well, yeah, the $2 trillion is over 10 years.
Gotcha. Now, on oil, a lot of the folks on this call are looking at oil. West Texas Intermediate closed to 61.67 last night. As you know, it's flat for the year, but the Brent, $66.46 just now, Byron. How do you feel about the development of oil price fitting into the mix of what you just laid out for the economy and the markets this year, which is basically a very sanguine, positive, and constructive view from you?
Well, as you know, David, one of my 10 surprises for 2021 was that oil would go to $65. When I discussed this internally at Blackstone, they asked me what I was smoking. They thought that there was no chance that we were going to get to $65. 60 was a stretch. Now we're over 60 on our way to 65. My reasoning was the following. The economy was going to be recovering. At that point, manufacturing was about 3/4 of the way back to where it was in 2019. So I thought manufacturing would be strong. I thought services would be strong. As people became more comfortable and more people were vaccinated, they'd be traveling more, which was good for air travel. They'd be driving more. They'd be going to work. So my view was there'd be more demand for fossil fuels, and that's the way it's turning out. So my view is that we're going to see higher prices for oil. I don't know how much higher from here, but I'm feeling pretty confident about my $65 surprise for West Texas Intermediate.
I was blown away checking out your surprises. How many? you say it's a good year when you're over 60%, but you're already there. It's amazing this year, Byron. Talking about oil, inflation versus growth. I think this is on a lot of people's minds these days. How's the outlook for inflation? And you heard Chairman Powell yesterday, and he'll be there again today. And how do you see inflation evolving this year, Byron?
Well, I'm a little more worried about inflation than some of my colleagues. I think we're going to see some more inflation. One of my 10 surprises was the 10-year Treasury would go to 2%, and it may even go up above that. We're already seeing prices rising at the consumer level as more people get vaccinated and begin their normal activity, or resume their normal activity. So I definitely think inflation finally in the Fed's eyes is going to go to 2%. The CPI will go to 2% and probably above that. But I don't think we're going to have the kind of virulent inflation we had in the 1970s. I think those days are over, but I do think inflation is going to be more of a problem than the consensus thinks right now.
Byron, the vaccines, mutations, economic reopening, you've highlighted a little bit of this in terms of your positive and constructive outlook on the economy, especially in the second half of this year. Do you, as you survey the public health and the medical aspects of the vaccines and mutations and variants, do you see any risk here, or how does this stack up to you in your sources and your perceptions of the vaccines and virus situation?
Well, I think the vaccines, certainly the Pfizer and Moderna vaccines work. I think the Johnson and Johnson vaccine will work, and there will be others. In my 10 surprises, I said 5 to 10 vaccines would prove effective. There are some variants. The Pfizer vaccine seems to be effective against the South African variant. But even if the variants prove to be a problem, you'll be able to get booster shots to take care of it. So I think we're getting the virus under control. I had said that we'd be back to some form of normal by Memorial Day at the end of May. Maybe we're going to slip a little bit on that, but I think the 4th of July looks good. People will be resuming normal summer activities this summer in the United States and Europe. I don't know how fast travel will come back, but it will come back. So I'm still optimistic about getting back to normal in the fall. What do I mean by getting back to normal? Schools will be open for in-classroom learning. Sports events will take place. Some, but not all, theaters will open. In dining in restaurants will be up to 50 to 75%, maybe even more. So we'll be back to some form of normal by the fall, and that's good for the economy everywhere.
And Byron, the outside the U.S. and outside of Europe, in terms of vaccine rollout, from your perspective, do you see a similar time frame or later for the distribution and application of the vaccines outside the U.S., Europe?
Yeah, I think Europe is behind us, not everywhere. The UK may be ahead of us, but I think by the fall, Europe and the United States will be reasonably back to normal.
Now,
I really can't comment on the Middle East.
Okay,
Israel
good.
certainly will be back to normal.
Excellent. Byron, the U.S.-China relationship, the evolution from here. You've written about this. You've commented on this for many years. You've watched China grow. Their GDP in 2000 was $1 trillion. Today, the GDP of China is 14 trillion plus. Japan's GDP in 2000 was 4 trillion. It's only 5 trillion now. How do you see the U.S.-China relationship evolving from here? And isn't this a critical point of the economy in both nations?
The United States is still the number one economy in the world, but China is number two. As Graham Allison wrote in his book, Destined for War, when the number one and number two economies in the world are in conflict with each other, it's a very dangerous situation. There have been 16 examples of this in Sparta. So we don't want that to happen this time. I think our relationship with China worsened during the Trump administration. Now Biden has made one phone call to Xi Jinping, but I'm convinced that Antony Blinken is determined to improve our relationships with China. There is some risk to that because China has moved forward without us. And there's some question on the part of the Chinese of whether they need the United States as a partner going forward because they're doing so well on their own, as you point out, David. Nevertheless, I think it's in the best interest of both parties to have a more harmonious relationship. I think the Biden administration is going to work very hard to achieve that. I'm hopeful they'll be successful. I think China will see the advantages of a favorable relationship rather than an unfavorable one. And so I'm optimistic that progress is going to be made. But I think there are a lot of risks associated with it, and we're just at the very beginning of the attempt to have a workable relationship at this point.
Just in the beginning stages of attempting to rebuild a workable relationship. And as Byron, as I look, and we've talked about this, artificial intelligence, semiconductor chips, much less 5G and robotics. Do you see the U.S. Making an effort? Is going back to even to the infrastructure spending? Should the U.S., Byron, be helping companies become national champions and get a leap forward in this area? Because as I look at this, you just said China's really, in some ways, surpassed already the United States. I'd love I think we'd all love your thoughts on what's the best path forward in these technological areas where China has made such great strides.
Well, there are some industries where we have had leadership and we've got to maintain it. Boeing was clearly the leader in passenger aircraft, in the 737 MAX, and now the problems with the 777 represent a setback there. We were the original leaders in semiconductors, and now Taiwan Semiconductor has wrested leadership there. So both in commercial aircraft and in semiconductors, we should try to regain our leadership position. We were certainly the leader in autos, but we've lost our leadership there. I think we have to and I think the Biden administration is very sensitive to this. We have to restore American competitiveness. We can't be dependent on suppliers overseas for every technology product. I think pharmaceuticals and medical equipment is a good area where we can reestablish our leadership position. So if we do it in aircraft, semiconductors, pharmaceuticals, and medical equipment, we'll come a long way to our technological leadership position that we had in the past. But we can't relinquish all of our commercial leadership positions to others. We have to maintain leadership as the #1 economy in the world. And the competitive pressures are very, very large. And so it's going to take a lot of government support and research to do it. But our universities are the best in the world. We've come up with innovation on a consistent basis. I'm confident that we can restore our competitiveness if we put some government effort behind it.
Byron, building on that, the 70s were such a tough decade, and we went through them. And then there was this turning, and we went into the 80s, which were the Reagan advance, and then the 90s, which were the Clinton and the internet, and then past that, even into the smartphone advance, Byron. Were there signs that you saw? Because you really, you talk about maintained leadership. You maintained and built on your investment strategy and strategist leadership with some of the great calls of all time in some of these great technology plays of the late 90s. Were there signs? Are there signs we should be looking for, Byron, that would indicate that the national mood is changing in the direction that produced a 1980s for the U.S. and a 1990s for the U.S.? Are there societal, political, financial, economic signs that we should be seeing? A light goes on saying, look, now we turn the corner. Are there things that we should be paying attention to here?
Well, I think I think Boeing's leadership has to be restored. I think Our leadership in pharmaceuticals has to be restored. In medical equipment, it has to be restored. In semiconductors, it has to be restored. So those are some of the industries that I'm looking for the restoration of American leadership. But there are others. In agriculture, we have been the leader in hybrid seed corn and other forms of agricultural improvement, fertilizer, pest control. So I think it's across the board. America's universities are among the best in the world. Great research is coming out of them. We have to harness that research for commercial purposes. But I'm confident that America can resume its leadership position in a number of different areas as a result of our research and development capability.
Thank you so much. I think before we get into a little bit of portfolio positioning, which you highlighted at the beginning, and the shift from defensives to cyclicals and so forth, Byron, your thoughts. You're talking about batteries. You're talking about Tesla. You're talking about electric vehicles, and then, of course, that brings up Bitcoin. We would love your perspective, having witnessed a bunch of these memes and enthusiasms that have developed over the years in many sectors of the economy. You were there with Mary Meeker and everybody, and as the internet began to roll out, and then in the mid post 2000 era when the smartphone came into being, Byron, what are your thoughts on Bitcoin, Tesla, electric vehicles, batteries? There seems to be a lot of enthusiasm here, especially amongst the young generation, Byron.
Well, the young generation really made the internet happen, and it's continuing to come up with modifications of the internet that improve the quality of life. My view is electric vehicles are coming. I'm a little more skeptical about the timing on self-driving cars, but I definitely think that the objective to have the new cars coming on the road be electric by 2035 is going to be realized. But there still will be a lot of fossil fuel powered vehicles around even after that time. Nevertheless, I think that's happening, that we're headed toward electric vehicles. But that doesn't mean that we're not going to be dependent on fossil fuels to produce the electricity that these vehicles run on. So change is coming, but I think it's probably not going to come quite as quickly as the optimists think. I think uses of the internet are going to be continuing to grow. I think most of us have learned that we can work reasonably effectively remotely, as I've been doing for most of the past year, and I think others are doing. And so if that's the case, that's going to mean you don't have to go into the office as often. Companies aren't going to need as much office space. That's going to have implications for cities and for office space in cities and for in-store retail sales. So I think there are a lot of changes coming, and I don't think we're prepared for all of them. But I think what investors should be doing is thinking about secular change. What are the secular changes that are going to come about as a result of the COVID-19 experience? And they're considerable, and they're across the board in real estate, in manufacturing, in services, and in government. And they have investment implications. And that's why you see the FANG stocks doing well and the rest of the market languishing. But I think now there's a leadership change to more cyclical companies and also to smaller capitalization stocks because investors are becoming more creative in their stock selection. So there's plenty to do for an active investor. And I think there are many opportunities in the market, even though the overall market, primarily because of technology, is at an all-time high.
Byron, I have to throw this in. One of my favorite stories from you is you went over to visit some guys at Goldman Sachs in the Hamptons, where you have a place, and the east end of Long Island, and you went over there to visit them in your Morgan Roadster, which your beloved wife Anita had given you. You went over there and you congratulated them on their upcoming initial public offering of Goldman Sachs. And as you're pulling out of the driveway, you said, "One more thing, you'll never be driving away from me in a Goldman." I love that one, Byron.
Yeah, no matter how rich they become, they'll never be driving a Goldman.
Byron, Bitcoin is cryptocurrencies, digital currencies that the central banks of the world are discussing. Is this something that we should be including in our investment thinking in terms of its implications, its ramifications, Byron? Digital currencies, cryptocurrencies?
I definitely think so, David. I'm spending more time trying to understand it. I haven't bought any Bitcoin yet, but I'm getting close. I wish it would settle down. I think its volatility is its biggest liability. People want it to be calmer in performance. The fact that it's at 45,000 is unsettling to potential investors. It is right now viewed as a store of value, but it's not viewed as a transactional instrument. I think people have to be convinced that it is a stable store of value, and its volatility is not its liability. But right now, it can't say that because it's still too volatile. Nevertheless, I've come a long way in the last few months in thinking that it's real and it should be part of individual and institutional portfolios.
It closed at 48,000 and something last night, and you know this, Byron, better than anybody. It was at 58,000 on Sunday, so that's quite a bit of volatility. So we need it to calm down. I love that. Before we go quickly to the end, Byron, on portfolio positioning, which brings us back to where you were your opening remarks, digital penetration. You talked about changes in lifestyle, working style, even travel, digital penetration as a fallout from the COVID-19 pandemic, on employment. And Byron, especially many of the folks on this call are in or exposed to financial services. So your thoughts on digital penetration into financial services, wealth management, asset management, trading, communication. How do you see this progressing?
Well, I think it's going to continue to develop, but of course the challenge is to control it when it gets out of line, such as shorting a stock to an extent larger than its float, as happened in GameStop. So I think the challenge is going to be for the regulatory authorities. It's not quite the simple business it was when you and I first got into it. And so that poses a challenge for the SEC and other regulatory bodies. Nevertheless, there's more and more wealth in the world. There's more of a demand for quality investment management. And I think you're going to see the investment management business growing over the next few decades. and an individual judgment will play a role in that. But it's becoming more complicated. When you and I got in the business, derivatives weren't really a part of it. Now they're a very active part of it. But we've got to be on the watch for examples of manipulation, individual stocks, currencies, and so forth. And it's up to the regulatory authorities to take the burden of that responsibility under their wing.
Byron, I just want to thank you and say we've got about 3 minutes or so in terms of what we promised everyone today. I'd love to come back to your thoughts on shifting with emphases within the capital markets, specifically equities, U.S. versus non-U.S., small cap, mid cap versus mega cap, Byron, defensives and cyclical. But before you answer that, I just want you to know, I want to let you be thinking about 2 final questions that were not in our earlier discussion. One is, who is your Byron Wien? Okay. Number 2, or who's mentored you and who's inspired you over the years? And number 2, advice you might have, and you've written on this so lovingly and so sensitively over the years, advice for young people entering this business today. But first, a couple of thoughts from you or your insights on the portfolio shifts for 2021.
Okay, well, I think we're going to see the economy broaden out. And as a result of that, I think some cyclical areas are going to do better. They've lagged behind. And I wouldn't exclude or didn't exclude energy from that because I thought the price of oil would rise, and it has. I think the large capitalization technology stocks like Facebook and Google are pretty fully priced at these levels. So I would stay away from the FANG stocks, but I would buy growth stocks. I still think it's going to be a slow growing environment, 2% growth for the foreseeable future. And I think this is going to be a very long cycle, could be as long as the cycle during the last decade that ended with the beginning of the virus last year. I still would own some growth stocks. I would own some cyclicals, and I think small capitalization stocks will do well as investor horizons broaden out and knowledge increases. I'm very negative on sovereign bonds, but I'm optimistic about mortgages. So I think the high yield bond market will do well. It already has done well with yields below 4%. So I don't know how much better it can do from here. But I would look to invest in mortgages because that's where you can still get some reasonable yield. So that gives you plenty to do this year. But I just think the overall market as a result of technology is relatively full and vulnerable to a correction.
Byron, this is phenomenal. I would highlight for those who read and read your 10 surprises, there's always a few also rans, which are always quite interesting. And you've highlighted for us to be aware of potential cyber attacks and also possibility of North Korea, Kim Jong-un, perhaps softening his stance a little bit. So we'll see on those. Of the 3 also rans this year, one that really got me was that Tesla might take over a major global automobile manufacturer. But that I'll leave those for the side for people to read and think about. And it's a classic Byron Wien, which really opened our mind and expand our whole scope and our whole perspective. And we are so grateful for that. Advice that you might be giving a young person coming into the business, and you've been a great mentor to me and many. who have been your Byron Weens over the years, Byron?
Well, David, as you know, I wrote a book with George Soros, and I spent a whole winter every weekend at his home in Bedford working on the book with him in 1995-6. So he's definitely one. European that many of your European clients will know, Edgar de Picciotto, the head of Union Bancaire Privé, was definitely a mentor of mine. I would see him several times a year and spend several days at his home in Cap d'Antibes or Saint-Jean-Cap-Ferrat. He was definitely a mentor. Barton Biggs was a mentor, and he's the one who pulled me over to Morgan Stanley. In my first job in Wall Street was with a guy named Bill Brokaw, a Harvard Business School classmate of mine. So those are some of the mentors that I've had along the way. But I'll tell you, David, you can learn something from almost everybody, good and bad. And, whenever I'm with somebody, I try to take advantage of that experience and learn from that person based on what he or she has to offer.
I love that, Byron. And learning opportunities.
I learned a lot from you, David.
Well,
in the way you've regenerated yourself.
Well, you're there. You're inspiring us, and I'm so grateful for what we've had. And after I joined Morgan Stanley in the mid-90s, you said, David, you better make sure that you eat in the partner's dining room once in a while so that they see you over here. You gave me these little pointers that were just so valuable. Byron, young people, and you've been so great over the years in taking Soros and Barton Biggs and de Picciotto. I remember every year I used to especially look forward to your essay on the smartest man in Europe. And you never gave his name until he passed. You know what I mean? And you would talk about.
I protected his privacy while he was alive, but when he died several years ago, around this time, I revealed his identity as Edgar de Picciotto from Union Bancaire Privé.
Young people, as we close out today, and thank you so effusively and so profoundly for your insights today and the clarity. I wish all of our people in the political environment could take a lesson from the understandability, the comprehensiveness and comprehension of the way you deliver. And it's just inspiring me today. Byron, young people that enter the business today, whether it's in investment banking, whether it's in asset management, whether it's in wealth management, what are a couple of things you would want to make sure that they pay attention to in development of themselves and their careers?
Okay, well, the first thing I would say is try to associate yourself with a growth business. For example, I think that money management, investment management is a growth business. And I think a firm, private equity firms are going to continue to thrive. So that's one area of finance. I'm not as optimistic about investment banking because I still think there's too much capacity there. The second thing I would look for are businesses with high margins because they can afford to pay you well and they can also finance their own growth internally. So take a look at the margins of the business. You know, for example, a company like Tesla has very generous margins, operating margins on the cars. They spend it on growth, but they do have good margins. So focus on top line growth and also focusing on overall margins. So those are two things I would watch. I would focus on new industries, like internet-related industries. Not all of them will succeed, but the ones that do will be very rewarding to the shareholders and to the employees. And I think legacy industries are more competitive, have narrower margins, and are in a tougher spot. Work hard. Everybody tells you to do that. If you're a really young person, try to go to the best college you can go to. And when you're there, take advantage of it. Try to meet and associate yourself with the most inspiring professors. Get the most that you can out of the college experience. And be careful who you marry. Your life partner is a very important component of success. The job you pick is the second most important component. Make sure your family life is constructive, because if you're a happy person at home, you'll be more effective at work. I wish all of you good luck, because luck plays a very big part in everyone's life. If I look at the turning points in my life, luck played a very big role.
Well, we're very lucky and fortunate to be with you today. I want to thank you, Byron, for agreeing to do this. We started talking about this a couple months ago, back in November, December, and you were so generous to agree. We look forward very much to many of these predictions and observations really coming to pass, and especially thank you for your thoughts on career development at the end. It's a classic Byron Wien. It's been wonderful being with you today. We wish you much continued entertainment, insight, growth, and you are continuing to be a beacon and a shining light to us. So we appreciate being with you today, Byron. Thank you so much.
David, thank you for this opportunity to speak to your clients. I hope they'll give at least some of their business to Blackstone. Every one of our platforms, private equity, real estate, credit, and money management, represents an opportunity. We have a very good record. So
Byron,
at least worth a look.
On that note,
David, you've been a good friend for a long time, so this doesn't have to be the last time we do this.
Thank you so much, Byron.
Thank you very much for the opportunity.
Barron's, as you saw, I know, on that note, had a wonderful description of Blackstone's involvement in the life sciences field. I was blown away by the extent of their involvement, from real estate to pharmaceutical and biotech development. It was just an amazing piece, and anyone who's interested in the life sciences field should get their hands on this weekend's Barron's, which had that great piece on it, Byron. To be continued. Thank you so much. We'll see you soon, everybody. Have a great day.
Thank you very much.
Thank you, Byron. Bye-bye.